So, thanks a lot. Welcome everyone to the panel from pilot to issuance and scalability of digital securities. I'm Sandra, I'm the Chief Strategy Officer at intas.tech, and I'm really pleased to be here to talk with you about scalability in the area of digital securities, because we have seen a couple of really interesting pilot projects in the last, let's say, 10 months. And now we know we need to go ahead that. And so how can we scale? Because pilot projects are always starting points. And now we need to go ahead and need to scale these learnings we had from the pilot project. And I think we have the perfect panelists here to talk about that. And I will introduce you yourself. So maybe we could start with you, Anna-Naomi.
Yeah. Hello, my name is Anna-Naomi. I'm a trained lawyer working at UBS Investment Bank. Now I'm responsible for structuring in a trading team. So we issue securities on a regular basis for UBS and third parties. And besides that, besides traditional securities, we also issue digital securities. Now we started experimenting 2015. And since this year, we have a commercial offering where we issue digital securities and sell them to investors. And we are particularly interested in creating securities on public blockchains wherever possible. From a regulatory point of view, we are active in Switzerland and mainly APAC. So we have a global team. And especially in APAC, the scene is very vibrant at the moment. And we also participate in some mass-sponsored projects called Project Guardian, where we also push the boundaries a little bit in terms of paying back a digital securities, for example, with digital deposits. And so, yeah, we try to work together with many different counterparts like distributors, digital custodians, and yeah, it's very interesting at the moment.
Thank you. Simon, you want to continue?
Yeah, sure. Simon, I'm working at Hauck, Aufhäuser, Lampe as head of digital assets, now for 2 years already. Used to be in the same role for Deutsche Börse Group before. And before that, I was at Commerzbank, also doing some blockchain use cases. At the bank, we built our own area for digital assets. Within this area, we have 3 distinctive business models. The first one is crypto custody. We have still yet the first and only crypto custody license as a bank in Germany and in Europe. We are second also a crypto manco, so we are issuing crypto funds. We have issued the first true crypto fund in Germany, fully regulated, with up to 100% assets in crypto directly as of 2022. And third, we are also one of 2 banks in Germany only with the preliminary license as a crypto security registrar, so that we can issue crypto securities under German law just as regular securities. And have serviced in this role Siemens AG in the issuance of a 60 million euro bond also in the beginning of this year.
Thank you.
Hello. Rajeev Bamra. I oversee strategy and operations for Moody's Investor Services, which is a credit rating agency. My team has been trying to identify operational and technology risks that digitalization across the value chain would bring to the table, which would then be integrated with the known financial risks in order to come up with a wholesome credit assessment of issuances on a blockchain or a digital platform, as well as the institutions who are exposed to the operational technology risks because of either their investment in crypto assets or digital assets, or implementing the technology itself. We have also now incorporated AI analytics with the recent development around Gen AI and other artificial intelligence technologies, and we also strategize and oversee risk related to cyber, credit risk related to cyber specifically. Glad to be here. Thank you.
Thanks for the invitation. My name is Ralf Kubli. I'm on the board of Casper Association and also related to Nucleus Finance, which we are here today. Nucleus Finance provides basically a solution for the brute force reconciliation problem in banks and in finance. And what does Nucleus Finance do? It builds basically machine-readable and machine-executable term sheets that clearly define the payment obligations of the parties to these financial instruments that then live on DLT, blockchain-based environments. We have a number of clients. The one example that I always talk about, and hopefully at some point I can talk about it publicly, is we've tokenized $5 billion worth of leasing assets for a large leasing firm which wanted to really explore how this new financing world would look like and how can they refinance themselves at more attractive rates in the capital markets. Today we work with a few clients, mostly around credit markets. Some of them are internal credit markets, where these large financial institutions want to have a much more efficient way to transfer and manage liabilities and assets between entities.
Perfect, thank you. So since we're talking about the topic from pilot to scalability, what is the status quo when it comes to digital securities in the German market, but also in the EU? What do you think? Simon, you want to answer? Or Anna-Naomi, who wants to start?
Well, I think I comment best on the Swiss market.
Perfect.
And I think that the situation is a little bit different than in Germany, because the market is different. So, for example, we have a huge structured product market where obviously digital assets or tokenization is a very, very good use case. We have a clear regulation since several years now. So, I mean, the whole industry gets a little bit more mature, I would say. It's not so difficult to create a digital security in a regulated way. And we also have, I would say, a little bit more plain license situation. So we have this all under the banking license, so no different licenses to apply for. So for registrar or the different custody services. And I think, therefore, we are at the moment looking for partners who can kind of then digest the digital assets and sell them or custody them. I think it's still going on. And I think what is important for me to have a little bit the broader vision that why are we doing this? So it's not about cost saving or many counterparts said, so can you show me how much cost I save if I don't have a CSD or so? And I think that's a fair point, but I think we have to look a bit broader. So why are we doing this? Is the instant accessibility of the assets, the reusability, the programmability, like he mentioned, and also the efficiency, of course, is also a big part. Where then the cost, so the CSD cost is one sub-point, which is important, but it's not the only one. And I think the last point is kind of putting the smart contract into the center, into the nucleus of the financial system. So for asset allocation, for creating some readable documents. So the registry of the smart contract, or the smart contract, and then therefore the registry is really the nucleus of the new financial system order.
Coming back to your question, Sandra, it's a total mess. There is no standard at all, which I personally think is fine for the time being, because we have to start. So rather build something than get stuck in standardization discussions. But of course, everybody is doing it differently. And thereby we don't have a harmonized market yet, even within EU 27, compared to the Swiss market, which is always a kind of a bit of a different animal, right? Yeah, that's why you can't passport out of Switzerland and into EU27. So, but even if you're looking into the EU27 market with the DLT pilot regime, which also applies, of course, only for EU27 member states, even then, I think the standardization is still quite low, but this is something that is kind of natural because we go through development that follows the life cycle of the security. It starts with the issuance, it continues with the custody, the more complex asset servicing tasks follow latest, and for that reason they will also develop in this area latest. Still, we're in a position where the issuance itself is not in a mass market. Volker has just completely rightfully pointed that out in his presentation. And for that reason, of course, we do not see a standardization also in the issuance space. Therefore, if you're looking at scalability, we are very far away, to be honest. Yeah, and we can also see that simply by the volumes of issuances or the number of issuances. However, I think what is important here is also having a look on technical standards at least, because it will be harder to shift them maybe later on. So for us, it was very important, for example, to stick to a basic protocol that follows the Ethereum virtual machine, and thereby we can apply ERC standards. You can do this in a public network or private network as you like, but at least this is something where we can lay some foundations. And then if we progress with the smart contracts, because if you're looking at the smart contracts, literally looking at it right now for these securities, the smart contracts are very dumb. Because they also they can do very little yet. We know that they can do more, but we know that we can't integrate it into existing value chains. And for that reason, the smart contracts yet are very, very easy, so to say. But with being based on ERC standards, we are knowing that we can progress them. We can update maybe smart contracts later on and put more complex asset servicing tasks on top. But simply, we are not there yet.
What is your view on the German regulation? Because as we just heard, the Swiss regulation is completely different than the German one. And do you think it is helpful for making digital security scales within the EU27, or it's kind of hindering because it's a really specific regulation with the crypto security registry, etc.? What's your view on that?
Yeah, okay. Yeah, it's a bit of a two-sided problem, I would say. I'm completely with you here. Because on the one hand, Germany has pushed forward, and for that reason has, to some extent, created national standards, and now they have to be reconciled with European standards within the DLT pilot regime. To my knowledge and extent, currently it's possible that also German crypto securities can, for example, then be traded on a DLT, MTF, DLT, TSS, whatsoever. For that reason, I would say right now it fits pretty well. And also I would say by pushing forward also the European view has basically also relied to some extent on the German standards that have been created. So right now I think it's still okay, and it was a good move to push forward, but we cannot stay in a German bubble now. And we have to make sure that this is also compliant. And one way to do that basically is by, for example, custody of foreign securities. This is also something that is not new. Right now still law of securities is national law to a large extent with regards to the issuance. But then you can passport that by custody of foreign securities. And I think this could be a similar way also for the crypto securities.
Thank you. And when we talk about pilot project, Ralf, you just mentioned that you have done a couple of pilot projects and most recently one. Maybe you can elaborate a bit on that and what are the key learnings and maybe also the point of view from the investors. So what is their opinion on conducting these pilot projects? What are their takeaways and how you continue with that?
So of course, at Nucleus Finance, we're big fans of really the Nucleus, which really is defining the cash flows of the underlying instrument properly, which then allows issuers to actually refinance themselves and securitize some of these instruments, in a granular fashion. That is the that is the ultimate goal, right? That a capital provider can come, to a market or even to, a private debt environment and basically pick the assets that they would like at an extremely low cost basis and then move them, into their wallets or into an environment, into a fund environment or whatever it would be. So we're very excited. So the people that we work with, the issuers, they were focusing on that opportunity, right? The beautiful thing in Switzerland is almost any company can issue not any instrument, but many instruments. So there are no intermediaries and no hurdles to do that. So that was very exciting. But of course, we're conscious of the fact that a lot of the infrastructure isn't there. So imagine, in this case where we have term loans exist and they're nice and they produce nice cash flows. And then you go to a pension fund and say, would you like now to buy these tokenized, securities and individual payment obligations? And you would probably be met with some interesting reactions, right? When you went to a pension fund and say, please book it into your portfolio like that. So that's the next step, right? So that's what I see from a technology point of view and from an issuer point of view.
So they've covered everything I had to say, so I'm going to think of new things to talk about. So I'll just give out some numbers based on how the issuances we've tracked. So we've seen around 43 digital bonds issued since 2017, of which 18 have been issued in the past year or so, and of that 18, 12 were issued in the first 10 months of this year alone. So that shows the expansion of the digital finance ecosystem in terms of issuances of assets. And that could be at the end of the day looking at the cost efficiency that she just spoke about. And then connecting that to the Germany or the European or the EU ecosystem, 25 of those 43 issuances were issued in the European ecosystem, thereby showing that Europe is leading the way just because of the regulatory frameworks that are in place, the announcement of markets and crypto assets, which is bound to be implemented next year, and then the DLT pilot regime, which has its own benefits as well as challenges, as Simon mentioned earlier. I think coming back to the investors' question that you had, there is a need for accessibility, education, and awareness across the ecosystem overall. And there is also an absence of regulatory clarity, because a lot of regions and countries, based on the observations that we've had, tend to regulate the activities and not the entities, and that's not really clear either to the issuers or the investors, and that's a lot of that's the main reason or factor that needs to be resolved. Besides that, standardization was already mentioned, which will lead to interoperability, and we can discuss that in a few minutes. There is also a need for standard infrastructure globally, which would be needed, which would only come because based on standardizations that are set at a global scale, and not just one region or country issuing a bond because or an asset, because an asset, as soon as it crosses a region, if it's distributed ledger technology,
when
you
you
can't
talk
bound
about
it
infrastructure,
to a region.
what are you exactly meaning with infrastructure?
So infrastructure, I can cite an example from the Bank of International Settlements where they mentioned the concept of unified ledger, which is great when you hear it, and it could bring a lot of efficiencies if implemented and when implemented. I think the closer we've gotten to that idea is the regulated liability networks we are seeing evolve across the globe and different blockchains and different ecosystems. That brings back to the question of lack of standardization, because we don't know if they can interoperate. Can an asset issued in one network move to the other network in a different region? Does that asset then meet the the legislative requirements and the regulatory requirements in that region based on the blockchain it is? That's all still a if-then question, and still to be tested and still to be verified. And that's something that we as a company are looking very closely when we talk about operational risks and technology risks. It does not just bound to technology, it involves that legislative frameworks and regulatory frameworks, because if you don't meet that standard requirements, it's very important to analyze the risks and come up with an overall credit risk assessment from our perspective.
in your opinion, like what needs to happen to solve the issue of this lack of standardization? Because we have now heard a couple of times in the context of regulation, in the context of technology, infrastructure. So what needs to happen to solve it? Because I don't think the regulator will go ahead and say, you need to use this platform to issue your securities. So what, in your opinion, it's just a guess, I know it will be a guess, so, but just to hear your thoughts on that.
I can take a stab at it first. I think digital finance is still in its nascent stages. We've gone beyond the validation that the technology works. It's been tested and proven it works. It's just that need for those guardrails. And it's difficult to identify a factor or an actor that can bring that widespread adoption and bring those standardization factors into play. So it's a combination of multiple factors. We already mentioned education awareness, interoperability, infrastructure, but also besides that, it's just not policymakers and regulators. It's also the industry players, banks, financial institutions, even technology companies. We also want asset managers, because when we talk about issuing an asset digitally, that's all primary markets. We don't see that evolved secondary markets yet. We know a lot of companies and firms are working on it, but building that out is going to be important. There is going to be a need for digital fuel, which is absent. There's no digital cash. When we talk about blockchain, when we talk about DLT pilot regime, the whole concept is we need to have an issuance, an entire value chain end-to-end on a blockchain, issuance, trading, settlement, and we cannot meet that unless we have a stable digital fuel that drives that. We know stable coins, but we also know they are interlinked directly or indirectly to other traditional finance, DeFi and CeFi. However, there is a need for more stable digital cash. It could be tokenized deposits. It could be a CBDC, yet to be seen. And in the absence of that, we will never see those standards develop, because there will be no digital cash for that end-to-end value chain, which is on-chain. We also need I'll touch upon that interoperability topic. There is a need for interoperability. So DLT pilot regime, for example, a challenge is that if I'm doing a pilot or a project within that regime, I am not able to still interact with other distributed ledger and share the data, neither am I able to connect with the legacy system. So that defeats the purpose of, if I've tested it, it's successful, I still cannot transfer the asset or interlink to the broader ecosystem. So what happens after I'm done with the pilot? Where am I going after that? And how am I expanding, scaling, and interoperating, and what will drive that? Those are still questions to be answered. The third one is the whole concept of participating in the pilot regime. I think the whole idea of using the term sandbox kind of is also confusing, because the established institutions or the traditional finance institutions can still issue digital securities using the existing regulatory frameworks. They need not be in a pilot regime. And the process to participate and to be eligible to participate in the pilot regime may be too burdensome for a startup, because they need to get temporary licenses for MiFID II and the CSDR. And also, they cannot interoperate with any CSD because of that capability issue of integrating outside of their own blockchain distributed ledger technology they are using. So those are some of the points I can think of, and happy to hear other thoughts.
Yeah, I think particularly important is the interoperability between the traditional system and the digital security system. Because if we don't get to this point, then it is too expensive to have the mass adoption. And only once we have exactly this interoperability, that it is basically irrelevant what system you use, then you can get into mass adoption. And once you have the mass adoption, you get into real investor benefits, like just better rates, for example. Because then then this network effect comes into play, and at the end you have a security on the digital side, which is just having a better rate, and then it's quite clear where the mass goes.
I would add on the point also that Rajeev mentioned, especially regarding payment being the glue of the capital markets. And currently we don't have it. We know for sure that the ECB won't provide it for the next 5 years. So that is some good information because we can calculate with that. And so I still think, I've said this I think a year ago here as well, I would stick to it still, that we need a commercial bank to issue a payment mechanism, completely on-chain of course. And this will enable scalability for sure of digital capital markets. Regarding the standardization that you questioned, Sandra, I would say right now I'm okay with not having standardization. And the thing is, if you look how, for example, exactly in the payment area, standardization has been working with regards to e-money. There have been many initiatives within Germany, within Europe, to harmonize and standardize e-money payments between banks. And this was a complete failure. And I don't want to have this for the digital asset space. I don't want EPI for blockchain. This will kill it. Yeah? And for that reason, how was e-money evolving and being standardized to some extent? PayPal. So the question is like, what is the PayPal for a digital euro, for example, or for digital securities? Securities are a bit more complicated than the money side, of course, but I think just by doing it, I think this is a way to progress, and I don't want to have standards being set by people in large groups with a minimum consent who have never done it.
But I think we shouldn't. I mean, now this sounds very depressing. I don't know if you see it here, but you know, but I mean, we're advancing still.
We are
right?
crypto winter. Huh?
So, but it's advancing, right? So let's be clear. I mean, banks are tokenizing cash and cash equivalents, right? So it's happening. You know, UBS should probably take more credit for what they've started, you know, many years ago, which not many people know, you know, about finality and really this philosophy of getting liabilities on chain. So it's happening, right? So, and fund share tokenization, as we heard, is probably happening as well. You know, the industry has decided this is going to be more efficient and it's going to happen. So now everything in between, which is where, you know, we are operating, which is debt, structured instruments, and derivatives, we're going to need a standard, and the standard already exists. That's what we're building on. The standard is also available in WM data, so you don't really have to go anywhere. Your infrastructure providers here are ready to support you, and just use this, you know, algorithmic standard that defines the payment obligations of the parties to whatever then lives on these DLT systems, right? So, you know, we have to go to the lowest denominator of what we need to know about the financial asset. And, you know, in our world, and what I would propose is it's the cash flow, right? So sometimes I say the biggest threat to the financial systems is stupid tokens, right? We cannot have, you know, derivatives that are stupid that live in these DLT environments, because then we will just go back to the problems of 2008 and other crises, because we don't know what the counterparty really holds, and etc. So real-time position data based on something that you can machine read and machine execute is the key, and that obviously needs to be standardized. Obviously, we're not going to make any progress.
I see. So maybe to close, not with a little bit depressed mood, maybe all of you can give me like a point why you think there will be scalability of digital securities. Maybe not now, maybe not next year, but there will be. Why? What is the benefit for the market, for the investor side, for the issuer, for the financial institutions? So maybe you can give like a closing round, a positive closing round.
Yeah, I think I mentioned it already. So the benefits are instant accessibility and reusability, programmability of the asset. So I'm making these assets a little bit smarter, as this was said already. Then the efficiency is a big topic, which is often picked up first, and making the smart contract kind of to the nucleus of the new order of the financial system, I think brings huge benefit.
Perfect, thank you.
I think digital securities or digital assets in general are doomed for scalability. And the reason is the technological background. This is why we're ultimately doing that, right? It's a standardized and harmonized data format that everybody can have a look at, basically, and that simply lives as a data object with its life cycle on chain. That's the vision, I think, that we still have, even though it takes time to implement it. So if you compare it to what we currently have, simply from a technological standard, you compare bank systems, and everybody who has worked in a bank knows how bank system on COBOL work from a technological standard of the fucking 70s to 2020 high tech. Yeah. So of course adoption, especially in finance, takes time, but simply out of a technological view, that's an incredible, huge step.
I thought we needed a positive note to end, but okay, all right. So I can see traditional finance institutions being open to integrate with decentralized finance, digital finance technology more and more, and also decentralized finance protocols and institutions trying to integrate with the real world assets to open that risk exposure doors on both sides and kind of expand their user base as well as build those sustainable models in the real world over time. And probably this evolution may lead to that scalability and potentially interoperability, which is going to drive adoption. Unless we see interoperability, I personally don't think adoption would be as wide scale as we all hope for it to be. But I think the integration between two ecosystems based only on the technology efficiency, which will drive cost efficiency over a period of time, will lead to that scalability and interoperability as well.
I mean, I will echo what Simon said, right? So this is an assurance layer, right? This technology can bring certainty and clarity and provide insights in an immutable way that currently is just not possible. So it will happen. And where do I believe it will happen and why will it be driven? Because the desire and the need, we are in finance basically to refinance, right? We're in finance to bring capital to companies that need the capital. And occasionally we invent some crazy stuff like CDOs, then it goes wrong. But in general, it's about providing working capital to firms that actually do something with this money. And with this technology, we will be able to, on a granular level, refinance these needs of the real economy in a nearly automated way that just currently is not possible. This is the key, right? And this is the key, and that's I guess, what we're all working on.
Perfect, thanks a lot. I think that was a great closing round. So thanks a lot for your thoughts, for your impressions, for your knowledge and your expertise. I'm sure we are all here a little bit, so if you have any questions, so feel free to come to us and ask anything you want to know.